Hello everyone. Today I'm going to explain you how are we supposed to prepare profit and loss account as per banking schedules. The entire profit and loss account of banking can be divided into four groups. The first group is for income. It will be in two forms, that is in the form of interest earned as well as other incomes. Next part of your banking profit and loss account is expenditure. The entire expenditure can be divided as three things, that is interest expended. Being a bank, the interest what we are paying for the FDs and SB account what is maintained by our customer, and operating expenses are those expenses which will be incurred for doing your regular banking activities. Provision and contingencies, if anything is provided, that will be taken as a third thing in our expenses. Next is profit and loss account. So any profit of previous year, if it is there, we are supposed to bring forward that profit, and the next thing will be your profit during the year. After that is done, the last part of your profit and loss account in banking accounts is your appropriation. So under this appropriation, we have transfer, which is mandatory for statutory reserve. If you are a bank in India and if you're conducting any banking activities, 25% of your net profit should be transferred for statutory reserve. So any other reserves, if it is specified, we are supposed to transfer that reserve, and then the final thing is your balance sheet. Now we will take an example of a problem and I'll be showing you how it has to be implemented. So the first one, from the following information, prepare profit and loss account of Thrifty Bank for the year ended 31st March 2014. So we will just check the information what is provided. Interest on loan. Now, all of you know the loan is given by the bank to its customer. So if you charge interest on loan, it is your income which comes under schedule number 13. All of you can see the cursor here in schedule number 13. We have written here interest on loan because being a bank, you have given loan for your customer, and for that, the interest what you have charged will be written under schedule number 13 as your interest earned. The next one is interest on fixed deposit. So this 3,170 what we have interest on fixed deposit. Fixed deposit is maintained by your customer in a bank, and for this fixed deposit, whatever is there as a customer's fixed deposit, you are going to pay interest. You are not going to charge, you're paying interest. So any interest paid from the bank to the customer comes under schedule number 15 as interest expended. So we can see here we have interest on fixed deposit, the 3,170 under schedule number 15. So next we have commission. So they have not specified whether it is commission received or paid. So anytime if there is a commission, if there is no specification, we assume it as commission received. And as it is not in the form of banking activity, so this particular commission will come under your other incomes. So schedule number 14, other income, commission 82 rupees is reflected here. So next is payment to your employees. Now, this is one of your operating expenses. So operating expenses will be part of schedule number 16, and we can see here payment made to employees 540 rupees. So next what we have is discount on bill discounted. So discount on bill discounted is an activity by a bank before the expiry date. If the customer want to encash the bills, they go and produce those bills to the bank. So discount on bill discounted is nothing but the amount of the charges what you charge for discounting those bills. So we have 1,060 for that particular discount on bill discounted, and it is reflected in schedule number 13 as it is one of your banking activity. And as you're charging the discount amount, it will be part of schedule number 13 as interest earned. Next is interest on cash credit. Now, This interest on cash credit is also your interest what you charge for your customer. So it will be part of schedule number 13. It is reflected in schedule number 13 as 2000 to 30. So next thing is your rent and tax as well as lighting. So this rent, tax and lighting, again, it is your amount what you are spending on your operating expenses. So this operating expenses of 180 rupees is reflected in your schedule number 16 as operating expenses. So next part of our question is your interest on overdraft. So overdraft is a facility what banks provide to a customer, and they charge interest for that particular overdraft facility what a customer avail. So that particular thing will be reflecting in your interest earned schedule number 13,540. You can check here, there is an amount of 1,540 which has been reflecting there. So next one is our director fees, auditor's fees. So this director fees and auditor fees is a part of our operating expenses, which gets reflected in our operating expenses schedule number 13. So we have schedule number 13 in that, schedule number 16, where we are reflecting our director's fees as well as auditor's fees. So next part of the question is interest on saving bank deposit. So for the SP account, what is maintained by the customer will be paid interest for the customer from the bank end. So any interest what you pay being a banker, that comes under your interest expended schedule number 15. So we can see the reflection of 680 rupees under schedule number 16. So next is your postage and telegram, printing and stationery, sundry charges. All these three will be your operating expenses, and that operating expenses gets reflected under schedule number 16. Once you're done with your working note of each schedule, you have to check the total of your each schedule, and then we have to reflect that in our profit and loss account. Before that, we will check the reflection of additional information. Provision and contingencies, as the term itself indicates, it's a part of your provision. Provision doesn't have any schedule number, but it will be part of your expenditure. There we were going to take that particular provision and contingency. Here you can see only 200 rupees because the question, it is stated as 2 lakh, but the entire question what is given is excluding 3 zeros. So thousands are excluded. So you have to exclude 3 zeros when you're taking provision, and you have to just reflect 200 here. Transfer rupees 15,57,000 to reserve fund. That will be in our appropriation. You can check here, after making an appropriation for statutory reserve, we have to transfer for our reserves what is there for your central government as well as your reserve fund. So you have to remove 3 zeros, as the entire problem, it was excluding the 3 zeros, and which was done. So once you are done with the entire schedules, we need to consolidate. So we will check how it is reflected in our profit and loss account. The first part of the profit and loss account is our income. Under income, you can see interest earned, schedule number 13. The entire interest earned in schedule number 13 will be 7,420. So we had interest on loan, which has been charged, discount on bill discounted, interest on cash credit, interest on overdraft. So the entire interest in the form of interest, the income earned by the bank is 7,420. Other income was in the form of commission, which was 82. When you add both the things, it is 7,502. Next is our expenses. Under expenses, schedule number 15 talks about interest expended. So this interest expended total what we have, apart from your interest on fixed deposit as well as interest on saving bank deposit, both together came up to 3,850. So that reflection is done under expenditure, schedule number 15, 3,850. Operating expenses, all of you know, we had payment for employees, rent and taxes, auditor's fees, director fees, postage, sundry charges, printing and stationery. So the entire expenses came up to 822 rupees. So next we had provision for contingencies, 200. The entire expenses for that particular year is up to 4,872. Next, apart from that, we have to check what is a profit during the year. So we don't have any kind of profit which is reflecting in the question of previous year. So check your current year profit. How are we going to check the current year profit? It is your total income minus your total expenses. So 7,502 minus 4,872, we will get 2,630. The last part of your profit and loss account is your appropriation. So under appropriation, the first and foremost thing is 25% of profit should be transferred for your statutory reserve. So 25% on current year profit is coming up to 657.5. So kindly note that 0.5 is 500. As we have taken excluding 3 zeros, we have to consider that point also because it is worth of 500 rupees. So transfer for reserve, it is given in your additional information, as well as your transfer for central government is given. So if you take those transfers, the remaining balance which we have to transfer for balance sheet is 215. How did you get that 215.5? So that will be total of your profit, what you have in part 3 of your calculation, that is 2,630 minus your transfer for statutory reserve, transfer for reserve, central government reserve, as well as your other reserves what you have transferred. The balance what we have is termed as your balance which has to be transferred in your balance sheet. Thank you so much for your patient listening.